Ladies and gentlemen, welcome back to the channel. AMC stock, well, it hasn't done well for a while now. The stock has been oversold for an incredible amount of time. The stock has been technically oversold on the RSI for the entirety of 2024. So we have not seen a neutral AMC or bullish AMC in a very long time. Now, AMC stock was up considerably on Friday at one point. The stock closing the day down about 0.25%, up almost 1% in after hours. We do have some big news to go over, and I think this could be very much positive for AMC stock as well. So hit the like button as well as subscribe to the channel. We will go over all of the short interest data that you need to know as well here in this video, but I'm not going to sugarcoat it. Let's get straight into the sugar here in this video. It says movie theater circuit Cinemark's credit rating upped by S&P due to the end of strikes. Outlook is stable despite a soft box office. It says movie theater circuit Cinemark's credit rating has been raised by S&P Global, a small sign of optimism that exhibitors can weather the impact of Hollywood strikes and pandemic-altered movie-going habits. The agency said it raised its ratings on the Plano, Texas-based company secured and unsecured debt to BB+ and BB- respectively from BBB and B+. In a note about the move, S&P cited the end of the dual 2023 strikes and an increasingly stable outlook for 2024 and beyond. Now, why is this positive for AMC? Well, we'll talk about that here in just a second. It says, quote, the impact of the actors and writers strikes will largely be limited to 2024, S&P said in a note. The delays or cancellations of film productions have hurt theater owners and created material disruption to this year's. The agencies continued, meaning that Cinemark and other exhibitors will be directly affected by reduced box office attendance. In line with other forecasts, S&P said total domestic box office should fall about 10% this year to between 8 and 8.25 billion. While disruption to the release date could spill into 2025, S&P added, we expect films pushed into 2025 from 2024 will help negate substantial disruption. Now, why is this positive? Well, number one, AMC stock is trading at $4.10 per share. Odds are AMC's credit worthiness could also be upped as well, especially if things just continue as they are or ultimately get better from here. Now, the other good news is AMC stock is already being priced as if they're going to have a bad 2024. So any good news can be seen as really good news at this moment in time. I mean, just look at the average price targets right now on AMC stock. AMC's 12-month forecast is $8.35 per share. That is 104.66% upside at this current moment in time. In fact, AMC stock is trading lower than the lowest analyst price target on AMC stock. I think that just puts it into perspective. The lowest price target on AMC stock is currently about $5 per share. $5 per share. The highest price target is $12 per share. The average price target, $8.50 per share. So any good news from here, any price target increases from here could be really good news. Vice versa, though, there is always that possibility that price targets do get reduced, especially if AMC does go out and dilute shareholders further. If that does happen, then you could be in for more downside. Now, as well as that, next week's going to be a pretty volatile one, and we'll talk about the potential implications of next week in the next video. Now, you do have a moderate sell as far as the analyst recommendations. 0 analysts have AMC as a buy, which is interesting given $12 price target on AMC. You would think, that would represent over 300% upside from here. You would think that would represent, or be representative that you should have at least one buy rating on AMC, but, we'll see what happens. You have 4 hold ratings and 3 sell ratings currently on AMC stock. 7 ratings in total, average being a moderate sell, but the most, the highest rating you have is hold, and that is by those 4 analysts. So currently AMC stock is in a pretty optimal position here. As long as they don't dilute shareholders, you could see some pretty aggressive returns, especially as we get into the second half of the year, and that is something we'll talk about a lot more in the next video. Now let's get into all of the data you need to know on AMC stock here today. Take a look at StockTwits. Yesterday you were at 81. Now that was because AMC stock, it's like frozen in time here. AMC was up 2.94% last time this was updated here on StockTwits, and you were extremely bullish. 81 on the sentiment gauge. Today you're at 47. That's normal because on the weekends people tend to take time off. Views tend to be lower on YouTube. People just tend to relax on the weekends, which can't blame them at all. So shout out to you guys that are watching this video right now on the weekend, taking your time that you could be screwing off, doing other things to hopefully grow your knowledge and become better investors. So congratulations, shout out to you guys. Now, as far as message volume, 1 day ago that was low at 42. So yesterday it was still low. Today it's sitting at extremely low at 16. Now the participation ratio is at 56, which is on the high side, and the highest I've seen this in a very long time. Now, let's take a look at AMC stock as far as the Ortex data. Keep in mind, I don't think these numbers are truly accurate. I think the short interest percentage of free float is dead wrong. I think you're probably 200% plus sold short. But, the higher this goes, the more on face value people say, hey, AMC stock could go through a short squeeze, right? 10.47% short interest looks a lot better than where we were recently at 7%. 20% when we get there, I think we're going to get there, is people are going to look at that and say, yeah, that's pretty high. Potential for a short squeeze is definitely here. So as I said, 10.47% short interest of free float is currently where we stand. $107.04 million worth of short positions currently in AMC stock. Days to cover 1.39. 26.23 million shares that are currently sold short. Shares out on loan 23.53 million. Cost to borrow 1.07%. Utilization of 35.56%, and a short score of 58.29 out of 100. So some pretty decent numbers here. I'm not going to say strong. I was going to say strong, but stronger than what we have seen recently. I will give it that. Now, as far as hedge fund institutional option activity on Friday in AMC stock, you had 5 orders totaling $144,000 with a positive order value of 22%. So nonetheless, could be better, but definitely could be worse. The positive order value over the entirety of last week was only 7%. So 22%, as we seen on Friday, was actually pretty strong. Now, volume activity was on the lighter side, 59.59% to the call side, 40.41% to the put side. So on the lower side, but still pretty positive overall. Now, as we talked about on Friday, you had about 10,000 calls expire in the money, 82,000 calls expire out the money, 20,000 puts expire in the money, and 20,000 puts expiring out the money. Now for next week, you're already starting off in a little bit more optimistic position than not. You already have 20,000 puts in the money, 25,000 puts out the money, and on the call side, you have about 4,400 calls currently in the money and 42,000 calls out the money. Now, why I say this is, starting off in a good place more or less for next week. Because, if you start to see a bounce, if puts start to go out the money, that's obviously buying pressure. If calls start to go into the money, that is obviously buying pressure as well. But it's pretty neutral across the board. There's almost exactly the same amount of calls as there are puts. So nothing to really necessarily write home about there. The latest AI investor sentiment survey that we did get, I like to go over this because it shows you just how broader markets are feeling about the markets, or broader investors are feeling about our markets. 39.3% of investors are bullish, 34.6% are neutral, and 26.1% are bearish. So pretty interesting that the bulls are declining as the markets are hitting all-time highs. Neutral investors are above historical averages at 31.5%, and bearish investors actually falling right now. So the markets are definitely in a weird spot. 10-year treasury on Friday was basically flat. 10 2-year yield curve actually inverted a little bit more, so that's a little bit of good news. Now you're inverted 19 basis points. On one point Friday, you were only inverted like 14 basis points or so. Now, if we do see an uninversion happen next week, that could also be pretty negative for our markets. Think about it like this. When you actually go positive on the yield curve, that's when people start to say, hey, we could be entering into a recession. Now, 2022, yes, you were in a technical recession for the first 2 quarters. The government didn't declare we were actually in a recession. We'll see, maybe looking back, they'll say, yeah, we were actually in a recession during that time. Who knows? The bureaus can do whatever they want in that regard. But, 2022 was so bad because everyone was looking forward to the recession that would come by the end of the year or in 2023. That did not happen. But you still had an over 20% drawdown at one point because of those recession fears. So if you get recession fears, which, could in part come with the uninversion of the yield curve, historically, you're either in a recession or you have, on average, 4 to 5 months before you go into recession. Well, if markets look at that and say, yeah, we could actually be heading into recession in 2024, you could get some downside here in the markets. And I do think that is especially important right now because, the S&P 500 hit a new all-time high on Friday, a brief one nonetheless, before you started selling off into the day, closing down about a quarter of 1%. Including the move in after hours. There's a lot of meat on the bone, if you will, for a potential drop right now once things do start to go sideways. Now, we'll talk about this a little bit more in the next video, but you do have some very important earnings for small cap stocks coming next week, and mega cap names like Magnificent Seven stocks, SoFi, Monday pre-market, and Supermicro. Supermicro has been absolutely parabolic. This is SMCI for anyone that is a little unfamiliar with that company. They are the largest company in the Russell 2000. They're up like 70% in January. They've already given updated guidance for what their earnings are going to look like. That's why they were up like 35% last week. On Friday, they were up big. But this stock has went from, being in 2022 around $50 or so, $30 or so at the beginning of 2022 to $474 right now, $476 flat right now. So, any bad news there could, definitely rock the small cap stocks quite a bit, considering this is the number one weighting. So between SoFi and Supermicro on Monday likely to be all about small cap stocks. And then you get into Tuesday, Microsoft, AMD, Alphabet, and AMD's another one there. Obviously, Supermicro's a semiconductor company, AMD as well. They do tend to use somewhat of the same technology. So I think some of the good news, basically all of the good news, is probably priced into stocks like AMD, Supermicro, even Nvidia for that matter. To see a pullback here would not surprise me in those stocks. And then later on into the week, you're going to get MasterCard, Thermo Fisher, Boston Scientific, Boeing, and Novo Nordisk. They report Wednesday pre-market. After hours, Qualcomm, big supplier, if you will, for phone companies like an Apple. So Qualcomm earnings likely to move Apple. And then on Thursday, you have Altria, Royal Caribbean, Peloton, Enterprise Products Partners, Cardinal Health, Honeywell, Tractor Supply, Stanley Black & Decker. And then Thursday after hours, Apple, Amazon, Meta. And then you're going to have the Fed squeezed in there on Wednesday. And then big economic data on Friday. Again, we'll talk about that a little bit more in the next video. I wanted to give you guys a little bit of a heads up here in this video. Yeah, next week's going to be pretty dang crazy. Now, AMC stock is obviously going to react to what the broader markets do, so I think there's a chance broader markets do pull back from here, so there's a chance AMC also pulls back as well. You're sitting at your key critical resistance level at $4 per share. If you break under that, $3.50, $3.75 or so could be in the cards pretty dang soon. Let me know what you think about this information down below in the comment section. Are you bullish? Are you bearish? Are you buying? Are you not buying? Are you selling? Let me know what you are doing with your position down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.